What's up, guys? So I'm gonna go over the markets here real quick. It's a little bit different today. Usually I go over it the night before, but I chose to do it in the early AM today to give me time to go over all the stocks and really think about the next swing trade I want to do. And I know some people out there are struggling during this time. That was a quick flush down second half of the day, and the market does not look good. But before I get into the charts, if you can do me a favor, hit the like button, leave a comment below. Helps the channel grow and lets me know that you want to see more of these videos and gives me the feedback to continue to do them. So if you can do me a favor, help me out. Ultimately, I want to teach more people technical analysis and how I go about trading and my thought processes and stuff like that. So also I have this free Discord in here. Also, if you want to check out the Discord, the link's in the description below. It's completely free for right now. It's not always going to be free. I go in here, my trades, my thought processes, what I'm doing throughout the day, and take advantage of it. Like I said, it's completely free. You can at least learn. It's not always going to be free. So as far as trades yesterday, you can see right here, I was trying to trade that bounce, and that was a pretty frustrating trade. We didn't really get it. I'm fully open with what I'm doing throughout the day, and my wins, my losses. I took a pretty sizable loss on trying to play that bounce, but I risked what I was willing to lose. So, yeah, like I said, it's free for now. Check it out. I do a growth account challenge where I say what I'm doing and show the process throughout that, where I deposit $100 each week into that account and show how I would grow it through shares as a brand new person to the market. And my plan is to eventually teach options through that so I can guide you through the steps that I would take while trying to learn how to trade the market and then hopefully expedite your learning curve. But like I said, links in the description below. Check it out. It's completely free for right now. But let's get into the charts. So on ES, I'm going to start with the weekly chart. We broke our stair-step pattern. We've only done this here and by a couple pennies over here and right here. So that was a first indication. But like I was saying in the other videos, the volume was not there. We didn't get volume until the second half of yesterday, and it came in a big way. But right now, on the weekly chart, we're still holding the 8 exponential. We're still in a weekly uptrend. So bulls are in control there. But the daily trend has changed. So we do have an uptick in volume. Nothing huge. If you look over these other weeks, we've had higher volume, but it's still notable. Closed at the lows, below the 20, below the 8. Big reversal candle. Some could say this was a trend change. Some people won't say it, but came down, inside bar, bull break to a bear break. This to me signals that we should be going bearish right now. So basically the second half of that day, for anyone that was not aware, we had 2 Fed members come out and basically say that they don't see any reason for rate cuts this year if inflation stays the way it is. So the market's been pricing in 7 rate cuts and 4 and 3, and now we have people saying 0. So the market doesn't like that, obviously. That's really bearish. They're anticipating rate cuts. They're saying we're not getting any. And just to touch base on this volume, that daily volume isn't higher than anything we've seen. You can see this hourly volume. That's the highest we've had in a very long time. Like we had it that high over here and on this drop here. And you can see we did continue to push up to another high on both these events. So this doesn't mean we automatically just flush from here, but this is a huge red flag. We're extended. Again, if you've been following these videos, you know I've been saying that we're in the time frame, weeks, couple months, to get a pullback of 5 to 10%. That's what I believe will happen. We get a pullback of 10% at least 1.1 times per year. We're now in April. So based off the overbought conditions that we did have, now we cooled those off a bit since we pulled back here. Historically, we are in that time frame, which is what my thesis was. The reason I was not overly bearish during that time is I wanted to see the bears do something on volume, and we got it. Unfortunately, I wasn't ready for this type of play. I had puts on CGC. I was in calls for SMCI, a small position, but I ate it on that. And I tried playing the bounce here. So you can see I have my zones, and I tried playing this zone here, anticipating that to definitely hold. That looked like a stronger zone. We were in the single digits RSI on shorter term time frames, and we were building bullish divergence. So I thought the bulls were going to bounce here, but they couldn't muster anything. And you can see at the end of the day, we got right to the final zone there, and we're bouncing finally off of this. Ideally, if you're trying to short this, I'd like to get back up to here. This is now a resistance zone. You know, people are trapped up here. That doesn't mean we have to sell off, but I was saying to people, as far as puts, you can't short the whole. Like, we were extended. You could see at the end of the day, right, we were oversold on the hourly in a good buy zone too. So to me, this is a good buy zone to get a bounce. You don't want to short there because the risk is a lot higher that we at least get a temporary bounce out of there and you're in the red on your trade. You want some form of bounce before you try to short. That was my opinion and how I was tackling it. You can see the 30-minute got down to the teens. The 15-minute was crushed, 9, and that's what I was playing for this bounce. I was trying to get a 15-minute bounce, and as I was telling the members that out of this zone, I was trying to get it. I tried to give it a little wiggle room after that, and basically got smoked on the trade. Oversold bounces are very high risk, and on that bearish news, I probably shouldn't have been playing it, just to be entirely honest with you. We got this bounce here. You can see the bulls were trying to. We had bullish divergence on the 5, and we had it on the 2. So we flushed down, bulls pushed up, flushed down, new low, no follow through basically initially. Bulls pushed up, and then they flushed it. So they were trying. The zone was trying to hold, and it would have paid pretty good. But unfortunately, I ate a nice L on the day because of it and turned my week into a red week. So a little frustrating. My plan was to play this bounce out of here and then go for a reshort and play the short, but they didn't give the entry. And I don't like shorting the whole, especially when you have this kind of build up. The risk was a lot higher, so I chose to just not do anything else besides monitor my bounce trade, basically. I cut everything at the end of the day, went fully cash, just for full disclosure here. I am not holding anything. With how fast the market moved there, you're not pricing in no rate cuts. So that was big news. Like I said, I shouldn't probably trade that bounce or tried, but it is what it is. You got to pick yourself up and move on to the next trade. For now, obviously this zone is holding. I would love to come up to this zone. You'd have confluence of the 20, the 8. Give me a bounce up to there for a reshort entry, and I'll probably take it. Not on ES, so I want to short the tech sector, so QQQ. I'll buy puts. And I'm not sure how I'm going to play it as far as time and strike-wise, but that's my thought process right now. Is we're still on a monthly uptrend, we're still in a weekly uptrend, but daily we're seeing the red flags. Like I said, you can see the volume spike here. We did close pretty much at the lows. I would anticipate, not that we have to, that bears are going to try to confirm this candle even more so. But the problem is we're in this buy zone. So could prove a little bit challenging here. You still want good entries. You can't just FOMO into puts. I mean, you can, and maybe they'll pay. But in my opinion, you still need to be patient and wait for solid entry points or for momentum to show that we definitely want to pull back here. I'm thinking we do. Just like I said, every day that goes by, we get another check mark as far as signals showing that the bears are starting to pick up steam. This is just another check mark for the bears. So this could easily be the start of it. And right now we've only pulled back 2.7%. I believe we have much further down to go. I think at least 5% over the next couple of months, which would bring us down to this support here. You can see wick here. We've consolidated here as well. Top of this push here, so somewhere around this zone. That would be like a shallower pullback. I think that would still be healthy on the monthly chart. Right now, what I would be scouting is 4-hour lower high, which we're bear flagging right now. Ideally push up to here, this zone. Like I said, that would be confluence with the 20 and the 8 and reshort that. At least you have some kind of zone and confluence of signals to mitigate some risk, and you're closer to the breakdown candle high, which is ultimately what you're shorting against. This is one massive candle, so where's your risk? Everyone can structure their trades differently, but that's ideally where you don't want it to close above. You want this to hold and for us to continue on a downtrend for a couple of weeks / months and get a pullback. But like I was saying, personally, if I'm going to short this market, I would short NQ, and that's what I'm going to look into. And right now, we are still bullish. We're closing above the 8 exponential on the weekly. Like I was saying for a little while now, though, watch this bearish divergence, right? So we still have slight bearish divergence. Funny enough, this 4-hour trend line, if you would have played off that longer term shorts, you could have constantly scalped and then, made money off this. It's still holding as some sort of area to short against. Daily chart. We have come down and we have touched the 50 period moving average for the first time this whole rally since October. Closed towards the lows, trying to hold it now. Again, ideally, you want a bounce here for a reshort. We're below the 20, the 8 exponential. Pretty decent volume. Again, you can compare it to these other candles and you can say it's not that much, but most of that volume came second half of the day. So we've only had that high of volume a handful of times. You can see on NQ, literally had it one other time this whole year. So, and we did push to another high. So that doesn't mean we have to flush here. We still have to wait for good entries. The difference between this sell-off over here and this one right here is that over here we're coming straight from all-time highs. And then on this one, we've built a big trading range up here of buyers that are now overhead resistance. So I would imagine bounces are for shorting. And with NQ being weaker than SPY right now, this is the one, in my opinion, to short. And I'll show a reason why on QQQ in a second. But right now, we are looking for any bounces up into this zone right here for a reshort. We do have this buy zone to contend with on our way down. But if you go to QQQ, this is why I would rather short the Qs. So like I was saying, just the other video, we have a ton of gaps. I have 6 on the way down, all the way to the October lows. I'm not saying we fill all these, but with that kind of signal, we closed at the 50, below the 20, below the 8. We actually closed below the 50. Like I said, we're bouncing in the after hours now, or pre-market, sorry. I would imagine this gap fills. This looks like distribution up here. It just does, but we need to close below 432.74 to start entering this gap, and I think we're going to go on a swift pullback if we get into there. It'll be really quick. You're talking about almost 2 months of buyers up here that are up here trapped. So stops are going to trigger, especially once we hit this. If we break that, I think it's going to be the time for the bears in a big way. This gap will fill. I anticipate this gap to fill, and then probably this one as well. And I said 5 to 10% pullback. That would be a little under a 10% pullback all the way to fill all those gaps. And with NQ, usually get a bigger move. We could pull back even further. So on QQQ, I just noticed on the weekly chart, we also had that bearish divergence. But with this intraday action, we've only made a slightly higher high. Bearish divergence. We're currently closing below the 8 exponential on the weekly for the first time. That'll be another signal. I'm looking for all those gaps to fill. Our next weekly support after this one breaks of 432.74 would be 421.63. But in my eyes, the most meaningful weekly support to ultimately hold, if this is the pullback, is 395.34. We could go lower. You can see we had a decent pullback there, and bulls held the 8 and rode it for a couple months here. Where this one was more like a sidestep, quick flush, and bulls bought the dip immediately. This lasted a whole week. So to me, this is more notable long term to hold. That level, 395.34. I'm going to go over some stock tickers here in a few seconds, but I just want to reiterate that this just feels to me that this is distribution at the top. Like I said, you got about 2 months of price action up here. That's a lot of buyers. So once this triggers and we go to fill this gap, which ultimately will fill, there's going to be a lot of buyers. They're going to be liquidating positions. Shorts getting confidence to start shorting the market, and selling produces more selling. And we can get down pretty quick in a hurry. The saying is the market takes the staircase up and the escalator down. It can go down really quick. This is an extremely extended market. It's about the third time in the last 30 plus years that we've been this extended on a rally. So we're due for a pullback. We have enough resistance overhead that we could definitely waterfall pretty hard out of here. So be mindful of that. I currently am sitting all cash and just trading around this. Like I said, I ate a loss on that bounce trade. I thought I could bounce, make some money, and reshort. They did not give it to me, so it is what it is. Aapl is extremely weak. We are in its last hold zone, basically, in my eyes. If we break below 165.67, this thing could easily flush down to this pivot here and this pivot here. There's little structure. You can see it's just a series of higher lows and higher highs this whole way up, but not meaningful sideways consolidation. So this would be your next structure, right around 150-ish. We could flush down there in a hurry, and that's, almost 10%, 5%. That could pull back the market pretty hard. And obviously, if you look at this bigger picture, there's a ton of buyers up here. Apple's been extremely weak for a while. So you're talking about almost a whole year of buyers up here. If this level breaks, there's a lot of people in the red and without much support below. So this could get going to the south side in a hurry, which would ultimately help pull down the market, which is already showing signals. If we go over to one of the stronger stocks in Microsoft, I'm going to start with the weekly chart because I want to show signals that could develop into the potential sell-off right here. So we do have weekly bear divergence in one of the strongest stocks in the market. Currently bullish, holding the 8 exponential. But this could start to develop, and if this goes, that's really going to add weight because this is also carrying the market right now. We did close below the 20, the 8. We've done that in the past, so that does not mean this automatically sells. But we are getting warning signs. So we're in a daily trend change, lower high, lower low, higher high, closed at the low. It's a little bit choppier up here. I wouldn't personally try to short Microsoft. You do what you want. But I said there's weekly bearish divergence. This is also looking bearish to me as far as the selling, but the whole market sold off. So ultimately, the market itself is going to dictate where most stocks go. Amazon, I was pointing this one out for a little bit, that we have this long-term zone up here. We have this touch here, here, almost touch there, touch here, and we traded above it a handful of times. So this to me is the zone for some kind of longer term short entry if we would short off. And I was saying that we also had weekly bearish divergence on Amazon. Right now we're printing a doji indecision candle in that zone. So if that confirms, we could get some pretty fierce selling. And we do have earnings coming up in a couple of weeks here. So maybe we don't sell off before then. We did get a large sell candle on some decent volume, nothing too crazy. But close at the lows, close below the 8 exponential. Like I said, the weekly bearish divergence. So this is just hinting that it could roll over. And once it starts to roll over, it could roll over in a hurry. You can see it was kind of like a wedge I was drawing. I was seeing if this would play out. But the way wedges are, because your supports are so close to each other, any heavy selling takes them out real quick, which forces more stops, which adds selling pressure, forces another stop, adds selling pressure. So you can really waterfall, right? If this was a wedge, our target is significantly lower. I'd probably look to somewhere around this area down here, which would be a significant pullback in Amazon, about 16%. I'm not saying that's going to happen. All I'm saying is that this is showing some signs as far as the divergences, big red candle, that this could start to tip over, but we have earnings in a couple of weeks. So who really knows? The reason the market's selling off really is because of the Fed members coming out and saying that they don't anticipate seeing rate cuts this year at all if inflation stays the way it is. So the market has to start to price that in now. Now to go over Meta on the bigger picture, weekly is still extremely strong. Starting to get an upper wick here. Daily chart. You can see we gapped up, start to push up, big upper wick, close at the lows. That's a reversal candle on some decent volume too. We have a gap below to fill, and we still have this large gap from earnings that could fill. They have earnings coming again. Again, a couple of weeks, we have tech earnings. So this is one of the stronger stocks in the market. I personally am not shorting this at all. If you're going to play short, this is not the one to short in my opinion. Could pay if the whole market rolls over, but I prefer not to short this. It's coming off all-time highs. And now for the biggest stock of the year pretty much, or the past almost 2 years, really, is Nvda. This one, like I said, I was looking at the 2-day chart because I was trying to give it a little bit more wiggle room for the bulls because the volume wasn't there to show that it was heavy selling. The volume's still not there. But again, the volume came at the second half of the day. So big red candle, closed below the 8 to 20. To me, this is not bullish at all. We're still bullish monthly chart. We're looking for monthly consolidation. So ultimately, maybe come back, retest this 8. Weekly chart, we're cooling that off, looking for a weekly higher low. We still have this weekly gap that I've been talking about, should definitely fill. So that's on the table in the shorter term too. We're still above the weekly 8 exponential though. We still have earnings coming up. That's in about a month and 2 weeks, week and a half. In my opinion, This wouldn't be bad for a longer term short. Not saying what to do with your account or what to trade, but I'm looking into it, anticipating this weekly gap to fill, which isn't much lower. I would want time on my side in case the market does something crazy and we decide to try to push again into earnings, and this is just another bear trap. But we're starting to get the warning signs here that this is definitely time. Like, this is the first time Nvda has closed below 20% here. We had a little blip here, and we closed below here. But what I was saying on the previous video is on the 2-day chart, we were holding the 8 exponential. And the reason I was looking here is because we weren't getting a lot of follow through with volume or any kind of meaningful selling. So I decided to move to the 2-day chart to get a little more clarity. And you can see we are closing below the 8 exponential on the 2-day chart. This is 100% consolidation from what I'm seeing. We're coming into the 20. We could anticipate a bounce because you can see we bounced here before. We have a wick here. So it doesn't mean we just automatically flush straight down. That's not how markets usually work. Now, any news that comes out today could definitely change that tone where we do just flush this. It depends. So obviously, if you look at this intraday, this did not look bearish at all. Like, that's what I was saying as far as that 2-day chart. You can see we pierced that daily support low. It came down here, and that's what I was saying. I'm looking at the 2-day chart because the volume still is really low, and the bulls decided they were going to push it up. They started changing some trends, bear flagged a little bit, and then they flushed it. So it wasn't really showing volume or the signal until those Fed members came out and started talking. And that's what ultimately determined the direction of the market right now. I would still anticipate a bounce. If I was going to short Nvda, I would like to short against this right here. This is a lot of structure. So a bounce up into here and reshort would be beautiful. So you know there's people up here that did not take their loss, and that'll add to resistance. I'd anticipate for candles like this, though, when you got pretty much a full-bodied red candle, that if we're opening up anywhere towards the low, that we're going to try to push this initially and confirm this candle even more. That doesn't mean we get a lot of follow-through, but that's the psychology behind it. And personally, I hope we open towards the lows. If they start gapping it down, that takes that off the table at 8:30. We have non-farm payrolls coming out at 8:30, unemployment rate, and then we have another Fed president talking at 8:30, another one talking at 9:15, 11, and 12:15. So again, littered with market moving events. Next week, we don't have anything on Monday or Tuesday, so that'll be nice. For all we know, one of these Fed members could come out and say they do see rate cuts, and then the market decides it's going to bounce. This can get a little choppy because there's so many people talking. They all have their different opinions on how to tackle inflation. We have this economic data that's coming out pre-market. I decided to stay cash because we were in my buy zone, extended, oversold, and we had a bunch of market moving events coming out pre-market. I'm not adding risk to a trade. I don't like shorting the whole in general. Even though it's a big reversal candle, we can always open up higher. So I chose to not enter any overnight positions and just be protective. If you only trade bullish, now is the time to be protective of your account and your gains. And even if you do trade bearish, you still want to be mindful of your entries, position sizing, and there are definitely rip your face off rallies during the bear trends. So be careful. So now for the elephant in the room, for anyone that's been following this channel, you know that I've been bearish, mainly bearish anyways, on SMCI over the next couple months. I flipped my thesis just recently because of the low volume. It looked like we were doing an equilibrium on a 2-day chart. I was saying that we could break that to the upside. for one more push up for bearish divergence on the weekly and rally into earnings. I think that thesis is no longer valid. It could play out potentially, but it's a long shot at this point, like a really big long shot. Odds are not even close, so I'm not trading that. The last month candle, we had an upper wick. We currently are forming a red candle right now on a monthly, cooling off this overbought condition. We were at a 93 RSI. You can see we're at 87 now. Still have a long way to go. Still far from the 8, the 20. This can pull back significantly more in order to hit that 8 exponential this month. Like say it would hit this month, we still got 32% more down. That would bring us to sub $700 a share. And that would be not exactly healthy, but I would say that'd be normal garden variety market behavior. If it takes a couple months, this is going to continually grind upwards. So say we're pulling back and this starts to slope. We could still pull back, another 15% or something, get to 800 a share. We're still trying to find our weekly high or low. We had an inside bar break bearish. Initially, we pushed right back up, which is why, again, I started looking at that 2-day chart. But now we're breaking below it. If we close below this, that's an inside bar bear break, still holding the 8, but it's a bear break. And that's showing further consolidation. We could, and are very likely to, come down and test this 20 over time. So over time, that's still sloping upwards as we're pulling back. Hypothetically, we could pull back. I still think we're coming down and filling that daily gap. So you can play that accordingly. I'm going to load my drawings here in a second. You can see this is textbook head and shoulders. We had our all-time high initially, S&P 500 inclusion, which is why I was shorting over here against one of my zones. We've built up a lot of buying over here, a lot of buyers into this stock. So if this neckline breaks, we can look for much further downside. Ultimately though, I've been targeting this daily gap. We filled our weekly gap last push down. But I was saying this is definitely going to fill over time. You want a lot of time on whatever you're doing. But this looks really bearish. There's even more people trapped. Like if you have a bear like me saying that the volume's really low, you can see it. The thesis made sense. So even though I took an L on it, it is what it is. That looked like we were tightening up into here. We could have made one more push up. We did initially push and break above this trend line that I had on the hourly chart. So I'll just show that here real quick. We had touches on that and we broke above it in the pre-market, rejected off of my sell zone. And I was anticipating that we would hold this higher low on the hourly. We did try, pushed up, and then start to sell off. And with this sell-off, this came once the Fed members started talking. So I actually grabbed another position anticipating that maybe this low holds. I was actually looking for a 4-hour higher low. That's what I was saying to people in Discord, that we did push up enough that we could see something like this, maybe, and then break. But the market did not like that news at all. We broke straight to another low. We're in a 4-hour downtrend. You can see that now. We are maintaining the daily downtrend. You got your lower high, higher low, lower high, lower low, lower high, lower low. So it's not as clean as you really want to see, but it's definitely a daily downtrend. Like I said, this 2-day chart is closing below the 8 and the 20. Reversal candle, wicks all over the place. This tells me it wants to go down longer term. Any sell-off, I would imagine bulls are going to buy into earnings, expecting them to beat maybe. But this talk of no rate cuts, the market is not liking. So now is the time to be bearish in the shorter term. In my opinion, that's what I'm doing. Over these next couple of days, couple of weeks, I'm looking for the bear trades. And there will be bounces, and they'll probably be pretty good. So be flexible. But if we do start to play out this monthly consolidation, we have much further downside to go. You can see the 8 exponential is below one of my buy zones over here at 706. And that's a small buy zone, really. This would have a little more structure. The one we bounced off last time at around 880. So we could do something like that, come down in here. Bulls try to buy this again and then sell off, fill that gap. Who knows, really? It's a day-by-day process. But this thesis of hitting a new all-time high and squeezing for one more push-up, in my opinion, is over and done with. The only reason I gave that any kind of possibility and weight is because on the 2-day chart, I looked out to there because of this daily chop and said that that was a possibility. They still could technically. They'd have to hold this trend line right here. These touches. Like I said, that's the head and shoulders neckline. So if they come down here, bounce, and they'd have to ultimately start taking out these resistance zones to really give weight that we're going to try and squeeze shorts out. And it would squeeze a lot of shorts out. There's a lot of people shorting up here. But I think that's a long shot, like I said. Even with the earnings, the market looks bearish. This looks bearish. I think it's more likely we come down, fill this gap over time, and consolidate longer term. We could grind sideways for a while. I've been saying that this could be a slower bleed. But if the market starts to really sell off as a whole, this thing's going to tank. It's going to get smoked. It's unfortunate with that talk because Tesla looked like it was really good. And now we have a large upper wick, indecision candle, closed in the old buy zone, which is now resistance. If the market cracks, Tesla's going to crack as well. This is not safe. Nothing's safe if the market rolls over, really. This has gaps below, so this could definitely start to waterfall if we break 152.37 and come into this big order block on a weekly chart. That's kind of it for any kind of analysis pre-market. Like I said, we have a lot of data coming out here in 1 hour, so that's going to really dictate how we go about trading the rest of this day. So my advice to you is be safe out there, be cautious. If you don't feel comfortable trading right now, you're taking a lot of losses, take a step away. You don't have to trade right now. There will be another trade in the future. There's a lot of opportunity throughout the year in the market. Step away if you have to. Don't feel like you have to force a trade. If you've watched to the end of this video and appreciate the content, please let me know by leaving a like, comment in the section below. And like I said, I run this Discord. It's completely free for right now, so check it out. It's not always going to be free, but for now, take advantage of it. It's going to be free for a little bit yet, and see what it's about. Learn, ask questions. I'm here to help you. I want to see you succeed. And until next time, I wish you the best in the market.